Hello everybody and welcome back to another daily show where we talk about stocks, commodities and cryptos. There's so much to discuss, but in general, we have a whole bunch of big news ahead. And on top of that, we also have rising rates. That is the US 2-year and 10-year causing some bearish concerns in these markets. In terms of structure and what we're seeing on the biggest market in the world, the stock market, lower highs are really showing that the commitment of the buyers has been weaker each time we've hit our defended zone. But we've been pretty good at navigating this together over the last couple of weeks. And for now, the trend is still up on the small time frames, but things are about to change. So expect a big move ahead of potentially some massive news coming out later on this week. Well, hello everybody and welcome back to the show where we discuss stocks, cryptos and commodities daily. This is for the close of the market, 8th of June, 2022. And if you like any of our content, remember to subscribe and smash that like button if you find value in today's video. We'll begin with the fear and greed index, still a fear reading, still a lot of fear around, though that has been rising up over the recent weeks. Is it time for the bears to come back and crash this market? We'll take a look at that later. For the last 24 hours of trade, it was really mostly red with semiconductors taking a bit of a battering, but we did see a little bit of strength in energy and of course Tesla held for the session. This meant that major indices around the world, the stock markets in the US, were mostly just opening up and then they closed at basically a neutral zone. We'll take a look at the deeper dive, smaller timeframes later, but the Russell 2000 showed a negative. That was the one that was showing a little bit of a positive, and then it dropped 1.5% while the rest of the markets were flat. Sector-wise, as we mentioned, it was energy. Metals were doing the worst. Usually when the US 10-year and 2-year rise, we do see metals and energy both do well. And this was a bit of a surprise, but they did drop and the sector did not perform for the day. It was mostly a mixture of really a mixed match. There wasn't any defensive or any particular growth that was doing well. You can see it here. It was mostly just risk off in general. Let's talk about the market charts though. Let's get into the VIX, the fear index as many people see it. Now we know every 5 level is super important. That is the 25 level, the 30 and the 35. I love the 35 from a capitulation zone in the future, and we always use that as a first touch. But now that we're through the 25, does this mean that the market is going down to 20 on the fear and that we could still be seeing a lot of bullish action? I think this is probably, I would say, first tick for the bulls at this stage. A lowering VIX means that there's a good chance that the VIX will try to come back down to something like the 20. That could coincide with certain SP500 levels, such as the 4300 as well. So we'll call that tick 1 for the bulls at this stage. And a lot of you will say, yeah, but Tom, the VIX can go up anytime when the market crashes. Of course it can. Let's move over to the DXY. This is where things come a little bit more muddled. You'll notice that over here, we changed our opinion on the dollar index being negative and started to go towards the bullish side. At this point, I'd call the dollar index neutral. We have a defended zone going through this area that is a buying demand zone. If that gets breached, certain timeframes on the smaller timeframes will change to the downside. But the big one is actually here, and you might have to wait a while at this point for the dollar index to really change trend. If it went underneath this zone though, get ready for dollar index to get crunched again. And at that point, of course, what would we expect? A big bull in the stock markets. Quite far away at this stage, and most of the smaller, like medium-term time frame trends are currently up. So we could expect even further bullish pressure here on the DXY. Be very careful. I would say more neutral, probably not trade in the dollar index for the next couple of sessions ahead of the ECB, especially on the Thursday session. US 10-year, this is this story of everyone discussing. If you read the news right now, they'll just crap on about this and they'll talk about the US 10-year and 2-year. Look, always important. We understand that at the markets are very sensitive to the US 10-year and 2-year. They always are. And both have been rising steadily. In fact, we're about to make a new US 2-year peak. And if this happens, what does it tend to do with the market? Well, it's not good. If the market goes up and the US 2-year goes up, that usually shows a false move. Last time when we saw that rally that happened through March, we had a stagnation in the US 2-year, then it started rising. It was too much for the market, and overall it obviously fell. So at this point, we need the US 2-year to turn. And this would be, of course, a big point here for the bears saying, well, look at this 2-year. I'm starting to get more bearish on markets. It's fair enough, and it's a good thesis and story to be, of course, told. Let's move over to gold now. Now, things become a little bit clearer here. Gold, potentially an inverse head and shoulders. Left shoulder, head, right shoulder, break of the neckline, and then retest back down. Now, that's very normal. We know that this level is most likely holding orders, or was holding orders, because you can tell the interaction with the zone. It swept those orders and then grabbed them and then moved back down. A nasty trap by Wall Street or the composite man right there. So this is an area of supply that has now been broken. We would expect gold to generally perform well, but of course at the same time you'll need DXY to go down. So gold looking a little bit more bullish inside of an overall bullish movement that still hasn't breached outside of this top end. So we've got the big heavy like hitters in terms of the resistance and the big heavy hitter in terms of the support. And at this stage, you can see with this doji, we're reaching a point of the middle of this zone, but it looks a little bit more bullish than bearish. What do you guys think in the comments down below? Are you bullish or bearish on gold at the moment? US oil continues its run higher, and it's been doing pretty well recently. Those two tweezers were hard to ignore in the last session. Even I couldn't ignore them, and I said, that looks pretty good. And at this point, it's coming up here to that 124 level. Will this be the peak for oil, and we'll see a drop off? A lot of it's going to come down to the US 2-year and 10-year. If the 10-year keeps rising, oil could keep going up and up and up and away. So be careful there. 20 moving average as well on the daily, you'll notice, has been a very big pickup. So if a close happens underneath the 20, it could also show you that the bears are back in oil. So for now, it's still bullish. And as you know, I'm personally fairly neutral on this market, but I have other reasons to be there. If you're looking at the pure price action, it's up. Let's move over to Tesla. Tesla on the weekly here, you'll notice how it looks. Then we start to drive down into something like the hour or the daily, and you'll notice the daily here shows a sign of a potential inverse head and shoulders. A decent day for Tesla considering the market. It did hold up, and it still has a little bit of work to do. Remember, it still hasn't filled this gap that it's left over here. So Tesla holding base, if the market is able to turn around, which at the time of this recording is getting pushed down a little bit lower than you would hope for, then there's a real case here to be said that maybe we need to move back to that gap fill. That gap fill will get us to around 775, 770 area. And then at that point, if we breach through that zone, of course, we take the inverse head and shoulders there, and we would say, okay, let's take that distance, let's take the neckline, extrapolate that out, and that will give us our previous kind of highs over here. I still think 950 though would be a monstrous level for Tesla, and you've got to be careful very much so around this if it does end up going bullish. Definitely subscribe to the channel. We'll be covering Tesla and Apple in more detail over the recent weeks. Apple, the other one, inverse head and shoulders as well. Potential here, no breach out yet. You can see the sloped neckline here for this one. Nice consolidation, not a great session for it. It was down 0.5%, not really negative either, I would say. And there's still the gap that's there. It kind of filled. I mean, I like to go wick to wick, so I'd say it got pretty close to filling. And yes, it's in general done a pretty okay job. We've got base formation down here, which is where you see defense. You've got a bit of defensive orders around this area here, which is, just so you guys know, 147.30 and around 144.30. And both of these areas will be important for Apple. This bottom one here, very important to keep the trend in the bullish side. And for now, Apple still looks relatively bullish. Let's check the markets around the world. This is where things changed in the last 24 hours. We saw the DAX get hit pretty badly. The DAX actually fell substantially down. It's still in the coil range, but DAX has been stronger generally than the other markets around the world. And this is the German market for anyone that's never seen it or looked at it before. So we've got a coiling market here, still the inverse head and shoulders, a lot of inverse head and shoulders, you'll notice. And at this point, it's still in the bullish case scenario, though it's coming up to a point where you wouldn't want to see it much more underneath this, which is sitting around that 14 kind of 3. So hopefully it can hold through this next session. ECB, press conference, all these types of things coming up. These meetings will mean a lot to the rest because it'll show us one of the biggest economies in the world and the central bank policy changes that they're making. As we mentioned, IWM led in the previous session and then it declined in this session. Is that good or positive or negative? It's mostly negative. But if you look at the Russell, and I'll bring up the futures market just so you can see this, at this point, it's been making a new peak. And of course, we have previous troughs or previous lows before that. So this will hold a lot of orders around this area, sitting around the 1830 zone for the Russell, a big key point moving forward. And then we've got another defended area around that 1868. So I think both this area here in the next 24 hours and this area here leading into Friday are going to be very important on something like the Russell. Well worthwhile having on, seeing how the market interacts with that. And sometimes the Russell leads the other markets because the small caps, they react very heavily. And as we know, funds have to remain invested. So what they often do is they dump the growth stocks, they dump the small ones, and they jump into the big caps because they always have to remain invested. And that means that the small ones lead the way. They led us up. Remember in the previous video we talked about that. They can also lead us all the way back down. NASDAQ still holding this big 12,500, 470 zone. If we move over to the futures market at the time of recording, you'll notice it's coming into that area. So coming into that bottom kind of area or zone down here. And this is again going to be a very interesting day trade because it looks like the market's coming into the support, looking towards this big news coming out of Europe, and then it will decide whether it's prepared to short through or whether it's prepared to go long back into the top end ranges. So all of these markets seem to be going towards these critical levels ahead of the big news that's coming out Thursday morning before the US Open. Let's also talk about S&P 500. S&P 500 currently coiling in the range. The trend is still up. And as I think we all know this, the trend from the daily perspective is up. The weekly, clearly down. The monthly, clearly down. And this coil is very important. We breached through this coil, and you'll notice I've got a line around that 41.67. We'll get back to that when we look at the futures. But this coil is very strong towards this zone here. Should we break? Where do we go? Fill the gap that's sitting there. It makes the most amount of sense. We've also got a box that's sitting here. And the reason we have that box is because of the futures market as well. We know there was consolidation here before it came up. We've got our defended area where the demand has been very fierce. And in the next session, if it does come back down to here, we're going to need to see reaction. Now, the problem lies when we look at the futures market. And this is where the bears will come in and say, I told you so. Look at this. Lower highs. I did a private stream. If you ever want to join the private stream, it's a free 7-day trial, link down in the description below. And we talked about this being a potential flag into the next session. Now, it certainly is a flag. And this is why you've got to be careful with patterns because you've really got to know how to trigger them. And coming into the session, you can see that flag and you can see how it's broken through, but it doesn't quite break through that peak, then reverses and it's all over and it takes out those lows. So this almost set up to make a new high, but this is such an important level. Remember we said 41, 67, 65 before. This level is not only massive on the normal stock market, but it's become the critical point of breach for the buyers. This area here, I believe in some ways, will really dictate if we get through there, probably taking out these previous highs and then moving towards that 42.80, 42.90 gap fill. Defended zone, you can see it. Level of last demand, you can see it. Neutralized area as far as I can kind of see on these charts. And at this point, we're putting pressure on that downward side. So if the market does break through here and the bond traders even are starting to get a little bit neutral, it might be a big deal and really allow shorters to get back into these markets. So we've got this box. We'll be watching it very carefully. And I think we've got a good trap here between prices, but we'll be very, very interested to see what happens over the next 24 to 48 hours. Speaking of options, which we said we'd bring up, max pain sitting at 413 in the previous close. Now, if we go back over and have a look at it, look how well they did at getting to that price. They really caused a lot of maximum pain on the previous close. They did well with the options. Now, if we move, that actually crept up as well. And what that means if it crept up was that there were a lot of puts and calls coming in near the end there into the expiration that really slotted us in this area to make perfect money. Check out that. Whoa, they've done well just to get it closed right exactly where they make the most amount of premium. Those nasty, sneaky people. If we think about the Friday session though, this is the big level, 400 being a huge support. And currently we've got a little bit of puts adding into the 410. So you'll notice maximum pain's moved up 8 points here to 408 from 400. And if that continues to move up and we continue to see downside puts entered, it kind of gives the bulls a better case scenario as well to say that this zone is defended by the street. They don't want to let it through, and don't lose sight of the next week expiration. This is the big one, the third